Welcome to another RES Wave update. In this video, we're talking about gold and my big picture view and what I believe is going to happen moving into the future. So if you haven't seen my last few videos, they've all outlined basically that everything's against the US dollar and the US dollar is continuing to move higher and will continue for now. If you haven't seen that US dollar video, you'll find it down in related ideas on TradingView. So anyway, the most standout thing here is the C wave that occurred from 1980 to basically 1999, 2000. This C wave basically happened around the time of the 1987 crash. That would have happened right in the middle. But regardless of that, I believe that the pattern is indicative of a longer C wave. It's a type 2 week 5 wave move where you can clearly see wave 1, 2, 3, 4, 5. You've got alternation between 2 and 4, and they overlap, which makes it the weak variation. And after C wave, we started D wave. D wave being the common theme here. And we saw wave A right up until 2011. And then we saw another one of those basically like expanded type 2 zigzags for wave A. And then I'll have to zoom in to explain a bit further what else has happened since. And also I'll get to the point where we go small degree and I'll explain that I believe that we are about to see gold turn lower. So the first part of the correction, wave A, expanded type 2 zigzag. You can clearly see that the first move was a 5 wave move, the last move was a 5 wave move. And in between there, we just had an expanded B wave to the downside and followed by CDE patterns. So then after that, we had a wave B, which took us up into March 2020. We had wave C, the Corona crash, and then we had wave D to hit that basically that all-time high briefly, and then come back down in wave 1. So this one now is labeled as a wave 1. I'll just go to the 4-hour chart. So you can see gold is starting to fall, and I believe this could be it for gold. There could be one more leg potentially, and I'll explain that in just a moment. And I'll also explain why it may not have another leg up. So here we can see that there's wave 1, 2, 3, 4 was expanded, and then we had a 5. So a weak type 2 again, 5 wave move, where there's overlap and it's 5 waves down. Wave 3 is not the shortest. Wave 5, I believe, started at this point, which makes it wave 3 the longest, which is, or if it's not the longest, at least it's not the shortest. I think maybe wave 1 could be longer potentially, but wave 5 starting right there is shorter. So the interesting thing about this pattern that happened afterwards was not only is it a wave A zigzag, but no rules were broken, no waves fell below the start of the zigzag. So we had wave A, and then you had your A, B, C, D, E in between, and then wave C for A. And then the rest of the moves stepped down in B, C, D, and I believe now we're in E. Now, where in that are we for E? I'll get to that in just a sec. So I believe we have a type 1 weak 5 wave move for wave E. First move was a zigzag. Wave 2 back down here, didn't break the lows, and then we had a sharp zigzag. That middle portion looks to be the shortest, so it can't be. Okay, so let's talk about this move here. So if this is 2 5 wave moves joined together, it'd go something like this, right? Something like this, if that's what it is. Otherwise, what could be happening here is that this is a 5-wave move, and what we're seeing now is the B wave of the zigzag, which will potentially mean that we're going to see this come back down a bit and then produce the C wave for the next leg up of the wave 3. So if that's the wave 3, then we'll get wave 4 and then 5, and that'll be it. This move will be over, and then that'll be the end of wave E, and that'll be the end of wave 2. Okay, so just zooming back out, wave 1 here, wave 2 there. So everything since that low in March 21 will complete the wave 2 since then once this happens, this move happens. So obviously we can't go above the start of wave 1, so there's plenty of room here to move for this to then complete the correction and then start to fall lower. So where do I believe this will fall? I don't believe anything at the moment. I just think that usually they fall to the previous 4th wave. It's not always the case, especially with expanded corrections, but they typically tend to at least come back down to, like there's an area of confluence, in my opinion. So that area would be, if I had to say something at all about it, it'd be somewhere between these 2 points. Okay. So anywhere within from the end of wave A to roughly wave 4 of the previous move. Now that's obviously a big deal, but there's just no telling. So, I mean, I wouldn't be surprised if it went to the midpoint of the whole thing, right? So around $850, it wouldn't surprise me. It'd surprise me if it went a bit lower, because that's obviously a pretty big fall, especially at the moment, because everyone's pretty crazy about gold given the environment. Except if the US dollar continues higher in this time, to me it's just very fitting of the whole thing just being a corrective pattern, wave B, and then in my opinion after that we will see another pretty big rally that'll look something like that from wherever it falls down to, which could then take this to 6,000, could be 5 6,000, something like that. It could even be higher. It depends where this wave E falls as to where we're going to start the measurement from. So like if it just dropped down and there was support due to the just the confluence of areas there, then that would take it even higher, could go as high as 8,000 potentially. There's no telling. So that's my take on gold. I don't think gold is special at this point in time, just because people consider it some kind of hedge against inflation or hedge against whatever you want to say it is a hedge against. um, yeah, look, I really don't believe that money printing is going to cause this to go higher, because at the moment you can see there's a lot of tightening going on. Interest rates are on the move higher, and I think interest rates are kind of bearish for gold. And in this particular leg, it really depends what the pattern in the interest rates will be, and that's going to be the topic of my next video, where I'm going to explain the different scenarios that I think is going on in the interest rates. Being a wave E, wave E's can be like what's happening in the US dollar in reverse. Sorry, no, what's happening in the US dollar could be very similar to what's going to happen in interest rates. Just interest rates may have just been a bit behind, but that doesn't mean anything. It just means that they probably will go up higher, faster, sooner rather than later. So that's my take for now. Hopefully you found this video interesting and informative. Thank you for watching.